Welcome back to another episode of the Benefits Insider. I'm your host, Chris Hamilton, and today I'm going to answer all your questions about direct contracts, how they can help your company reduce your insurance costs by 20 to 50%, provide better benefits to your employees, and lower costs to your employees. If you want to use your benefits to attract or retain talent, you have to offer something they can't get anywhere else. Now, the questions I'm going to share and answer are questions that I've gotten over the last several years working with employers just like you, trying to help reduce the cost of insurance in their business and provide more to their employees for less. So let's go ahead and start off with, what is a direct contract? If you think about the insurance plan that you have today, pretty much if you're in a major metro area and you're using a major insurance network, pretty much all the big hospitals are going to be in network. All a direct contract is either you as an employer, an advisor like me, or a third party going to one of those hospitals and saying, we want to create an agreement outside of your traditional insurance PPO network. We're going to create an agreement with you. We're going to incentivize employees. You're going to get more volume from us. And in exchange for that, we'd like to get a better price. And so you're bypassing traditional insurance contracting. And as I've talked about in prior episodes, the big insurance carriers aren't really negotiating with your best interests in mind. So this is a way to get better pricing. That's one of the biggest reasons why an employer would want to do it. So the second question I always get asked is, why would I want to do that as an employer? Well, the first one is you're typically getting better pricing, sometimes significantly better pricing by entering into one of these agreements. But it really hits on two of the three main pillars of the Benefits Insider program, which I share on my website. I give the playbook away for you to see how this could impact your company on my website, which I'll link to in the show notes. But two of these three pillars that we're hitting are removing waste and abuse and rewarding employees for being part of the solution. So I've highlighted in other episodes how insurance companies frequently and repetitively will pay more than they should for certain procedures and certain things in healthcare, primarily these big costs that are driven through hospital facilities and prescription drugs. I consider that waste and abuse. If I can go in and spend $20,000 on something, but my insurance company will pay $60,000, well, it seems to me that they wasted $40,000 on something that they shouldn't have. And the reason why that's important for you as a business owner or executive is the more we spend on healthcare, the higher insurance premiums have to be to cover those costs. So when your broker comes and meet with you at renewal and says, oh, hey, your claims are higher this year, the insurance company's wanting to raise your renewal rates to cover those costs, that's exactly what we're talking about here. So this is the potential. The majority of your costs are probably spent inside of a facility, which means a hospital. If you're like most employers, this is a way to dramatically reduce that cost. This is, if you think about the people that are insured inside of your company, the employees and the members, the spouses and dependents, very few of those folks are going to actually go into a hospital and incur a major claim. But the few, if you're a mid-sized employer with 100 employees, you're going to have a handful of people that do, and those handful of people are going to account for the majority of your plan spend and probably your increase in your insurance premiums. So if we can impact the lives of just a handful of people but get a dramatically different financial return, that's the leverage here, right? So this is the big opportunity, very low lift, big reward in doing so. So those are the big reasons why an employer would want to do that. So again, the two pillars that we're touching here of the Benefit Insider plan is removing waste and abuse, but the other benefit is if we can cut that surgery down from $60,000 that the insurance would typically pay to $20,000, the way we incentivize members is we waive their costs of accessing that healthcare. So traditionally, an employee would have to pay, $3,000, $5,000, $7,000 of their deductible and out of pocket. We waive those costs to give them a reason to be willing to engage in the program. So there's a reward for you as the insurer and also for your employees as the insured. Everybody wins in that scenario. So the next question I typically would get from somebody like you is, why would a facility or a provider want to enter into a direct agreement with me if they're already contracted with my insurance network? Won't they get more money doing that? And so on the surface, that's true. But the big benefit, and let me give you an example here. If you're think of the insurance company that you work with today. I already mentioned that all the big hospitals are in network with that provider. What advantage does your hospital have to to be part of your insurance program. They're just one of several places your employees can go. There's not really any preferential treatment for that hospital. So when you enter into a direct agreement, one of the things that you're giving in exchange to get a better price is you're giving that hospital or that facility preferential treatment in your insurance program. You're committing to that facility that you're going to try to steer your employees there, and you do so by making the costs lower to access that hospital. So think of the city that you're in. You probably have a couple of hospitals there. Hospital A, it's traditional deductible and out of pocket. So if you have a $3,000 deductible with a $5,000 out of pocket, your employee to have a major procedure in that hospital, it's going to cost them $5,000. But Hospital B entered into a direct agreement with you. You're going to get 50 to 70% off the typical insurance price. And in exchange, we make that hospital free to your employees. So if you're thinking about, average employee, do you want to spend $5,000 to get a hip replacement, or do you want it for free? And so the Hospital B is willing to give you a better price because they know they're now preferentially treated. They're going to get the patient to them. So you're steering patients by the way you've designed your insurance program, and in exchange, they give you a better price. So the next question I'm frequently asked is, what all can we do direct contracting for? The most common and popular place to start is with facilities. That's hospitals, imaging centers, places of treatment, not necessarily the providers, but the places, the brick and mortar places your folks are going to get health care. And the reason why that is, as I mentioned, it's where most of your dollars are being spent by the fewest number of your members. It creates a lot of leverage, big returns by being able to get better pricing from the facilities. This is the easiest way to bend the cost curve of your health plan. The second biggest impact or driver that we see of being able to use direct contracting is with oncology and infusion procedures. And so think about somebody who's going through cancer treatment. Not only is that a very devastating diagnosis to have, it's also very expensive for both the member and your health insurance plan. And don't mistake this, even if you are fully insured, really at the end of the day, you're still going to pay your claims because, again, what happens when claims are high at the end of the year? Your broker shows up with an increase. So you may have guaranteed rates for a year, but those claims are going to catch up with you when you go into renewal because the carriers are going to take those into account. For those reasons, it's important to try to manage the cost of these claims. And then when you do so, you're able to provide these big benefits to your employees of waived healthcare access. So when I think about oncology costs, the big driver of that for the ongoing treatment is the infusion of chemotherapy drugs. And some of these claims we see might total up to $300,000 to $500,000 in a given year. And the way we structure these direct agreements, we actually are able to provide more access to employees. Sometimes it prevents them from having to go into a medical center. They can go to an outpatient clinic. Sometimes we're able to provide the infusions at home using these direct contracted providers. And it makes it easier for your employees because they're not having to take as much time off of work. They're not having to travel into a medical center. They're able to get these in the comfort of their home or near their home. And it dramatically reduces the cost of those claims, providing the exact same medication and treatment regimen that the physician has ordered. And sometimes we're able to reduce the cost of those claims 50 to 70%. So if you think about that $400,000 claim, it now comes down into the single $100,000, and it's more palatable for the insurer, or if you're self-funded for your stop-loss carrier, you're going to get better results when you reach renewal. And just it works better for the plan sponsor, which is you, and it also works better for your employees because they're able to get care with their costs waived. We don't remove the options, but that's one that we bring. And in our experience, most employees prefer that option. So it's a benefit and a win-win for everybody involved. The third, where we see big contracting gains, is in providers. So I talked about facilities to begin with. That's the brick and mortar. That's the hospitals and imaging centers. The providers are the people that are inside of those facilities. So think doctors. And depending on where you are, where money is being spent, what sort of conditions you have ongoing inside of your group might dictate what providers we would try to approach. But for the most part, it's going to be bigger physician groups that have multi-specialty or multidiscipline. So think about primary care, various specialties, whether it be OBGYNs, dermatology, oncology, orthopedics. there's a number of large physician groups, depending on the situation, would be a great place to start. The other, which this would be a completely separate episode, but is direct primary care. And I speak all the time on direct primary care. I think it's changing the face of healthcare and insurance for so many different people. So the next question I get asked is, how do you do direct contracting, or how would I incorporate direct contracts into my plan? So the very first thing, most of the clients that we're working with today that are trying to control the rising costs of health insurance in their business, they're transitioning from the traditional fully insured insurance programming to more of a partially self-funded. We do a lot with captives, placing individual stop loss, whatever it's needed. The reason why we do that is when you're fully insured with a traditional insurance company, you're buying insurance plans off the shelf. It's already pre-made. You can't customize it. There's really no incentive for that insurance company, or they don't even give you incentive to try to help lower the costs of healthcare, because they don't give you any sort of access or visibility or control over the way it's structured or administered. So for those reasons, we see so many mid-sized and larger companies moving into these partially self-funded plans, because it gives them the incentive, the visibility, and control to do it. So that's the very first step. I talk extensively on that in prior episodes. I also share with you how to do this on my website. But there's 3 ways that we do direct contracting for our clients and ourselves. The very first one is the advisor picking up the phone. I can't tell you how many times I've picked up a phone and contacted a hospital or a surgical center or a physician group to try to negotiate a direct agreement on behalf of our clients. It may be for a system-wide contract where the entire hospital is available to all of our employees, or it may be to negotiate a single case agreement. Maybe there's a really rare or an infrequent episode of care that needs to take place, and we want to try to get a better price than what the insurance PPO network would typically pay, and it generates good returns. So that's the very first way that we would approach this. Is the way we've done it historically. In today's market, particularly in major metro areas, the second option is becoming more popular, and that's using aggregators. So you've probably heard some about high-performance networks. There are groups out there that have gone into these major metro markets. I'm thinking about in my home state of Texas, Dallas, Fort Worth, Houston, Austin, San Antonio. When you look into each of those markets, there's 2 to 3 big dominant hospital systems, and it goes back to what I mentioned before. In the traditional PPO network that you're using today, none of those hospitals has any sort of preferential treatment when it pertains to the employee-employer level. And so these hospital systems are so large, they don't want to contract typically with one-off broker here, broker there, insurance network over here. By the time they look up and it's all said and done, they've got 1,000 different contracts, and they're not really wanting to do that. They want volume. And so there are groups out there that have gone and negotiated contracts that allow employers to join onto via joinder agreement these contracts that have preferential pricing that can be anywhere between 20 to 50% less than a traditional insurance program or PPO network. And it's really easy, plug and play. You just sign on to it, and then your employees automatically have access to that direct contract. And then we wrap it with another network, or there's a couple other things that we can do to create more access. So employees have choice. You can go to the contracted hospital and your health care is free, or maybe you just reduce the cost and charge them a nominal amount, or reduced deductible. And if you want to go to the other hospital across the street, that's fine. You have a traditional benefit that would apply there. It's just going to be a little bit more expensive to the employee. Again, the whole intent is, how do we steer members to go to the hospitals that we want to, that have high quality but lower pricing. And then the third, similar to the second option, is there are vendors that have gone out and negotiated care bundles with facilities for certain types of care. So let's just say musculoskeletal. I need a hip replacement or a shoulder replacement or shoulder surgery, or somebody's torn an ACL, or I need a back procedure, something like that. General surgeries are another common one, where they'll negotiate episodes of care, but the entire hospital or facility is not open. Those are really easy to plug and play as well, because they've discounted them or negotiated discounts based on volume. So those are the 3 most common ways that we see to direct contract and add direct contracting to your plan. I hope it's been helpful to you. Take these tips and use them to add more profitability to your bottom line and more money in your employee's paycheck, driving stability to your insurance plan, creating more profitability for your company, and driving valuation inside of your company. If you've got questions on what this might look like for your business or how to incorporate some of these other aspects of the Benefits Insider Plan, check out our website, hotchkissinsurance.com/benefits insider. We share case studies, video testimonials from our clients. I've even got a cost estimation tool there that you can enter in the number of employees that you've got just to see what the financial impact could be to your company by utilizing some of these programs. But I hope it's helpful to you and your employees and your business. So until next time, use these tips to add more profitability to your bottom line and more money in your employees' paychecks.